All right. So today is the first day of June, which means May is in the books. And you know the saying goes sell in May and go away. And if you did that, that would have been a huge mistake because looking at this chart on my screen here, this is a monthly chart of SPY. And from the April close to the May close, SPY went up over 5%. And if we look at the monthly chart of the NASDAQ 100 triple Qs, from the April close to the May close, we went up over 6%. Now, if you're a Stocks Channel Discord member, you had access to the members only video where I predicted the month of May would be the raging bull. And if you saw that members only video and then you compare it to what actually happened in the month of May, it would appear as if I time traveled because nearly exactly what I predicted occurred. And a lot of people were going into May very bearish because we did start getting that bearish price action in April. Now that is very significant if you understand the fact that the S&P 500 is only up 11.3% year to date, and nearly half of that alone was done in the month of May. Now, if you compare it from March to May and you missed the drop in April, obviously you could have done a lot better. And very quickly here, let's look at how I am currently performing. And you could see in the month of May here, my performance for the month of May was over 10% for the month. And I am finishing the month of May in my account at a brand new all-time high. So with SPY going up over 5% in May and the triple Qs going up over 6% in May, I still outperformed both of the indices by a very nice margin with over 10% in the month of May. And as you can see from this equity curve, very little volatility and a very strong finish to the month. And if you watched my video on how to trade PCE data, you should understand exactly what I did to get that large spike in the last day of the month, because I was telling you exactly how to trade PCE data. And that is exactly what I did myself and did very well to close out the month. Now, the next thing I want to show you is year-to-date performance, because I told you by the end of June, I wanted my account to be up 50%. And by the end of May, I was able to pull it off. And I do have nearly a 50% gain year to date to close out the month. And then you can see here at the top right that I am closing out the month of May with a brand new all-time high in my account. So going into the end of June, my goal was to finish the quarter being up 50% so I can continue my goal of doubling my account by the end of the year. So this is going to be a very simple month for me. I just need to be very defensive and make sure not to lose money. And you can tell at this current rate, I'm making about 7% per month. So if I can continue that performance, which I think I'm going to be able to do it, then I should be able to hit my goal for the end of the year. So if you want to see how I'm trading and what trades I'm getting into with the risk reward setups and understand exactly how I'm trading this market, the best way to do that is going to be in the Stocks Channel Discord server. And in the Stocks Channel Discord server, you get access to all of my technical analysis, intraday updates throughout the day as price action is moving around. And you're also going to get some trade ideas from me on what stocks I'm trading and what risk levels and price targets that I'm looking for. But you will still have to go place those trades yourself, obviously. So if you want access to that information, you can find out how to join my Discord server in the description of this video and also in the comment section. All right, so now let's look at the daily chart of SPY and let's go over the trade plan. Going through PCE data, I told you that I was looking to buy the dip and using risk levels at 523 and 517. And I was being very explicit that I thought it was favorable to completely ignore trying to short the market and only focus on trying to buy this dip as we're coming into this retest. And if you don't know why I said that, then you need to just go watch that video because I'm not going to repeat it. But essentially, it is a very bullish pattern of an all-time high breakout and a retest. And that means it is a very low risk opportunity to buy the dip. And it rewarded everybody that did so very handsomely. And it happened very quickly because all of this move happened in the same exact day. And I do believe this arrow that I've drawn here is going to play out. And very early in June, we should continue this very powerful push. And you can see this all happened on enormous volume to finish out the month. And it all happened on a reversal off of a low intraday to push higher to close near the top of the candle. So it goes without saying, we filled the gap to the upside and had a very bullish close with price action back above all the moving averages. And if you've been following me, you know this is a very bullish configuration where all of the moving averages are positively sloping and the fastest moving averages are all over the slower ones, which tells us we still have a lot of bullish momentum and should continue pushing higher towards my price target at 534. So now that we've had the bullish bounce off 523, we need to stay above this level. And I told you, do not count pennies. 523 is just a number. Anywhere in this zone between 517 and 523 is where you should be managing your risk. And if the bulls cannot hold above this risk zone, it is going to look like we're starting a downtrend of lower highs and lower lows. So again, it is very low risk to be a bull. We are in a bull trend, so it is favorable to trade with the direction of the trend, and we have great reward to the upside, especially if you were buying where I suggested to do so, where it was low risk. And now we do not need to chase this move, whereas a lot of people that were either shorting the market or sitting in cash now have a very hard decision of whether or not it is worth chasing what they missed for the potential of making this little bit of upside. But as you saw in my performance, when you were buying down here, it was a very profitable day. And now it is next to a no risk trade to allow it to continue to run towards the price target. So this is why there is a very important difference with just trying to read a chart and actually understanding how to trade. And as you can tell, I am a trader and I use price action analysis to allow me to get the best possible trades. But it means nothing if you are just doing analysis and don't understand how to trade correctly. So make sure you are learning how to manage that risk and get in those best risk reward setups, because at the end of the day, as a trader, all that matters is that you are being profitable, and the best way to be profitable is learning how to become the best risk manager. That is what I am teaching you to do, and that is what I am focused on teaching in the Discord server. And I know a lot of you are doing very well, and learning how to trade price action is changing your performance, and you are now a lot more optimistic about trading. And that is the best news that I could possibly hear, because that means you are finally starting to understand all of these lessons that I've been teaching. So continue to focus on managing risk around these critical levels, and do not forget about the current trend, because we are still in a bull trend. So it doesn't matter who says anything. All of that is noise. All that we are focused on doing is following the price on the chart. And there will still be people who look at this chart and think it's bearish, but that is their opinion, and they're entitled to short the market as long as they want to. But I severely doubt that they're profitable, and that is going to be the main difference. On the NASDAQ 100 triple Qs, again, the trade plan of how to trade PCE data worked very well, and you can tell from the arrow, I said that I thought there was a good chance we would come down towards 446 to close the gap, and then from there, I would be looking to buy up the dip, and then on the way higher, I am looking for a brand new all-time high price target right around 461, and I am going to continue to stay long as the triple Qs can continue to close above 446, and if they cannot do that, I will be looking for a trip down here towards 436. So as you can tell, I am still going to stay long because this is working out very well. And this is only one of the trades that we were taking last week. But again, I was being very patient to make sure it actually came down here and closed the gap. So that patience paid off, because that's what occurred. And we were even able to get even lower dip buys because we went down towards 443. So right now in the triple Qs, I think it's just as simple as staying long if you were buying the dip, as long as we can hold above 446 and give yourself some wiggle room. Like I said, this is a zone between about 442 and 446. And if we can't hold between that zone, we need to start looking for the possibility we're going to 436. But while we are above that in this bull trend, above a rising 20 daily moving average, there is still a very good chance we are going higher for another brand new all-time high in early June. On the Dow Jones, we were up 1.59% on Friday, and this was by far the best trade that we took on Friday, because I was very focused on the Dow Jones bouncing off of this capitulation look for this dead cat bounce. And you could see from the arrow, I had no downside coming into PCE data, even though I drew downside in the NASDAQ 100 triple Qs. So if you look at those arrows and you look at the analysis, the Dow Jones never went down to break down below the low, even though the triple Qs did. And that is what is known as a divergence between the indices. And that is why I was more focused on trading the Dow and not the NASDAQ 100. However, as the Dow continued to bounce and hit my price targets, we were able to lock profits in the Dow Jones, move it over into the NASDAQ 100, which was now in the buy zone, and we were able to double dip on that trade and take profits on one while moving into one that was in the buy zone, and it worked out absolutely perfectly. So that is the information you're going to get in my Discord server. Obviously, all of these things happening intraday, there is no way I can sit here and tell you that throughout the video in the day before we can see the price action. However, if you took this trade, which you can clearly see by the arrow drawn, you still absolutely crushed the market, even if you did not take any other trades for the rest of the day. And we can now delete both of these gap fills because we hit those price targets. And right now in the Dow Jones, it's possible we continue to push higher towards 391. So you could continue to stay bullish, but you will want to manage a risk somewhere between 383 and 385. If we can't hold in this zone here, this could still be a lower high before we continue lower. But again, look at the volume bouncing off of the low with a very bullish candle. It is possible the low is in and we're just going to make higher lows and higher highs from here and go back into the bull trend. On the Russell 2000 IWM ETF, we were up 0.84% on Friday, and once more we're seeing some very strong performance in the small caps because we are getting a lot of bullish momentum to the upside with the price action back above all the moving averages, and we are very close to confirming a bull breakout the longer we can hold above the 205 breakout, and then of course the next one will be 207, but if we can get above these resistance zones, it is very likely we're going to 210 and 214. So I think right now in IWM, it's as simple as staying bullish while we're above 203. And if we can't hold above 203, we're likely not going to get a higher low. And that means we could still go down towards the gap fill at 200. So just manage your risk right around 203, and I think you'll do very well. On the ARKK ETF, we were down 0.79% on Friday. And once more, this is bearish below 45. So I'm not interested in going long on this ETF at all. It is still in a bear trend, still below the risk level at 45, which is telling us to stay risk off. And that means below 42.4, it could still go to 41 and then 40. And the only way we're going to get bullish is if it can get above 45 and 46. On the VIX, we were down 10.72% on Friday. And you could see another very accurate prediction with the arrow is that I told you the VIX would very likely crush from 15 and start coming back down towards 13 and 12. And the VIX closed down below 13 at 12.91. Again, following the charts is paying off and being 100% objective and not worried about the noise. And as we continue to see fear bleeding out of this market, we can continue to see the bull rally push to another new all-time high. So watch the VIX very closely and see if we can continue to get more VIX crushing here. On Bitcoin, we are currently trading just below 68,000, holding above the rising 20 daily moving average of support at 67,500. And I still think you should stay bullish above 65,000 for the price target at 75,000. These Bollinger Bands are starting to squeeze as we're building out what looks like a giant bull flag. And I do believe this bull flag is going to lead to an explosive breakout. And I do believe it's going to be to the upside. However, if it breaks down and goes down below 65,000, that is extremely bearish and you will have to get risk off. On Nvidia stock, we were down 0.78% on Friday, and we are continuing that rejection from the price target at 1155. And I told you from here, we could come down towards a gap fill at 1064. So I will go ahead and say there's a good chance that is still going to happen. And then from there, we need to likely consolidate, which means we will likely continue to build out some type of bull flag and just continue to go sideways for a while, because there's no real reason for this stock to just come crashing back down. And there's not really going to be a whole lot of bullish activity up at these higher prices. So I think this stock just needs to cool down and build out some kind of consolidation before we're going to see where it goes from here. And there will be a 10-to-1 stock split coming up in June as well. So that's going to be a lot of volatility around that event as well. And do not for one second think just because the stock is splitting that it needs to go higher. There is no way a stock split is going to tell us if the stock's going to go up or down. So if you're hearing any noise about that, let me just go ahead and squash that right now. That event is a big old nothing burger. It's still a full pizza. It doesn't matter how many slices you cut it into. And I don't care about any narratives of why people are going to sell shares or buy shares. It's all noise. Follow the damn chart. On Tesla stock, we were down 0.4% on Friday, and Tesla is building out some very nice consolidation above all the moving averages and that support at 177. And we are still holding above 173, so I'm not changing anything about my prediction. I do believe Tesla is still going to 207. However, I will tell you, it is a lot easier to just wait until it can start breaking above 180 and start building up some bullish momentum. That way, you're not just sitting in a trade going sideways and moving nowhere. So wait for that bull breakout above 180 and 185, and then I would start chasing it higher towards 207. Or if you just want to stay long and you don't care how long it takes to get to the price target, just manage your risk at 173 and 167. If we break below this support zone, get risk off, because that looks like a bear trend going lower. On Apple stock, we were up 0.5% on Friday, and Apple is one of those stocks that is now becoming a market-moving name yet again, and it always has been, but it had this very weird hiatus where it was going a lot lower during the bull market, and we were getting brand new all-time highs in the NASDAQ 100, triple Qs, while Apple, which typically leads the NASDAQ 100, was getting a full-blown correction. But as you can tell, it's back in business. It's continuing to climb higher towards my price target at 195, and it's very close to breaking out to a new higher high above 192. So do look for that new price target, and if we break through 195, we're looking for 198, and you should be just staying bullish above 190, but below 190 we're likely going to 186. So jumping back over to the S&P 500, as you can tell, the month of May was way more bullish than people were expecting after the bearish April, and the saying sell in May and go away was horrible advice. And this is just one of my constant reminders to block out all of the noise that you are hearing about the stock market. open up your chart, read your chart, and understand how to read price action, and then trade what the chart is telling you to do while managing your risk around all of the critical risk levels. And if you're having trouble finding them, the good news is that I'm on here every single day doing daily market updates telling you where the risk levels are. Continue to do this process while learning to manage risk, and you are going to unlock a whole new world of profitability around price action trading. And that is what I am doing each and every day in the Stocks Channel Discord server, and that is what I am doing my best to teach you how to do as well. So if you want access to that information, as well as all of my technical analysis, intraday updates, and my trade ideas, then you could come join the Stocks Channel Discord server by clicking on the link in the description of this video, and I'll also put it in the comment section, and you can come crush the market with us. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.